As Steve said, my name is Cynthia Adrian. I'm a tax research specialist here at the Tax Commission. And we're going to talk a little bit today about what you need to know if you're a senior or a retiree as far as income tax goes. So let's just dive right in and let's see what we have. There. All right. So what does Idaho tax if you are a senior or retiree? So the answer to that is it depends on whether you're a resident or not. If you're an Idaho resident, Idaho taxes all sources of income. So no matter where it's earned, if it's earned in another state or another country, as an Idaho resident, you pay tax on that. As a non-resident, you only pay on income that you earn in Idaho or from Idaho sources. Part-year residents are kind of a hybrid of both. So you pay income from all sources while you're a resident, but only income earned in Idaho while you're a non-resident. So that's how that works. So what is Idaho source income? Idaho source income is income from either transaction or activities that take place in Idaho or property that is located in Idaho. So you need to know about that. So you're going to say, okay, so as a senior or retiree, I'm not working, so I don't have income from a W-2, but I do have Social Security benefits. So are those taxable in Idaho? And the answer is no. So while they may be potentially taxable on your federal return, they are not taxable in Idaho. So what you're going to see is on a form that we have called a 39R for a resident, 39NR if you are a part-year or non-resident, and you're able to deduct the Social Security benefits that may be taxable on your federal return, on your Idaho return. So the other thing you say you have is pensions. So you've worked all your life and you now are earning a pension. And so by federal law, Idaho taxes your pension if you're an Idaho resident or part-year resident, even if that pension is from another state. And I know we have quite a few people that are moving into the state of Idaho from another state, and we get a lot of these questions about, oh, well, I just moved here from California, and I have a pension that I am earning from the job that I have when I was living in California. Well, the answer is that you are now an Idaho resident, and that pension is taxable in Idaho. So even though it's something you earned in another state, it is taxable in Idaho. If you're a part-year resident, of course, you only include the pension for the months that you are in Idaho. So say you move here in July. So July 1, the first 6 months would not be taxable, but the 6 months that you're here in Idaho, so July through December, would be taxable. So Idaho code provides for something that we call a retirement benefits deduction. And what that is you get limited deduction for certain pensions. And this is according to Idaho code. So it's not anything that we at the Tax Commission arbitrarily decided. It's something that's in code. And the way that it works is you can deduct a portion of your retirement benefits if both of these are true. You have to be at least 65 or at least 62 and disabled, and your pension has to be one of these three that we have listed here. It has to either be from the U.S. military, you have to be under the Foreign Service Retirement and Disability System, or under the Civil Service Retirement System. So you have to be, your pension has to be from one of those for it to qualify for these retirement benefits deduction. If you're married, you can't claim this deduction if you file separately. And the other thing is the amount that you're able to deduct is revised annually according to the cost of living adjustment through the Social Security. So we go out and look at that every year, decide according to what is in statute how much that maximum exclusion amount can be, and that is revised every year. And of course it is in our income tax instruction booklet, and in a few minutes I will show you. It's actually on form, again, the 39R or the 39NR if you are a part year or non-resident. Actually it's only for part year residents and residents, so not a non-resident. But that is, I will show you the 39R here in a couple of minutes. So if you are a surviving spouse and you are receiving your deceased spouse's pension, then you might qualify for this retirement benefits deduction. You can't have remarried at all, and again, you must be at least 65 or at least 62 and disabled. So just keep that in mind. So what are those qualifying Idaho pensions? We talked about the military, we talked about the foreign service system and the civil service system, but there are some Idaho pensions that qualify for this deduction. And again, this is according to Idaho statute. So the Idaho pensions are that if you get a pension from the Firefighters Retirement Fund that the Public Retirement System of Idaho, or PERSI, administers, if you have benefits for a retired police officer of an Idaho city, but that was not included in the federal Social Security retirement system. So quite a few years ago, there were police officers who were not under the Social Security system, so those people actually do qualify for this retirement benefits deduction. If they're under PERSI right now, they don't qualify. And then the other one is the Policeman's Retirement Fund for retired police officers of an Idaho city. That fund must no longer admit new members as of January 1 of 2012, and the Idaho city or PERSI must administer the fund. So if this is something that you think might apply to you, you might reach out at least to us to see if you qualify. So some other retirement income that qualifies is benefits that the Railroad Retirement Board pays or that Canadian Social Security benefits pays out. The federal government might still tax this, but Idaho doesn't, so just be aware of that. And the exclusion, so the amount has to be included in your federal adjusted gross income before you can exclude it. That just kind of makes sense. You have to have the money or the amount in your adjusted gross income and income before you can deduct it. And as promised, here is a snippet of the 2023 Form 39R. So this shows you the calculation that you go through to determine how much of your benefits are deductible for Idaho. So again, like I said, these amounts up here where you're going to see the $43,524 if single, or married filing joint, $65,286, those are adjusted every year. So when you see a 2024 form, it's going to look different. There will be different amounts there. And again, you just go through this calculation. It's pretty simple. You enter the amount on line 8A. You would put in any retirement, federal railroad retirement benefits on 8B, Social Security benefits on 8C. You just do the calculation. And there are instructions, of course, in our instruction booklet that gives you more information on exactly what all is included on those lines. And again, if you're in doubt, always give us a shout. I mean, we're always here to help you and to make sure that you're comfortable when you do your return. Let's talk a little bit about grocery credit. If you've been in Idaho for any length of time, you probably know that there is a grocery credit that's available to Idaho residents or part-year residents. That grocery credit is supposed to help offset the sales tax that you pay on groceries. So if you come from another state where groceries are not taxed, groceries, when you came to Idaho, you did realize that you're paying sales tax on your groceries. But this grocery credit is supposed to help offset those sales taxes that you have to pay. The credit amount for 2023 is $100 per person. So for you, your spouse, and any dependents you might have, if you're age 65 or over, you get an additional $20. So it's $140 for anyone who's over age 65. That amount is entered on Form 40 for a resident, and that's line 43. For Form 43, those are for the part-year residents. And then a Form 24 is if you don't make enough money that you need to file a Form 40 or a Form 43, you can just use the Form 24 and just get the grocery credit. You don't qualify for this grocery credit for any month or part of a month that you received assistance from the federal food stamp program, if you were incarcerated, or if you lived illegally in the United States. And here's what we have: a grocery credit worksheet in our instruction booklet, and here's what that looks like. Again, you just put the number of qualified months. So if you're only here for part of the year, you can put in the number of months there for yourself and your spouse, and it tells you exactly, if you're 65 or older, what you multiply that by. If you're here for the entire year, here's what you enter, and you just work through this grocery credit worksheet, and then once you come down to line 6, you're going to enter that amount. It says on line 43 that would be for a Form 40. Again, you would do that if you are a part-year resident as well. So let's talk about a few more deductions that you as a senior or retiree could get on your Idaho tax return. So one of those is a college savings deduction. And you might say, well, I'm not going to go to college. Well, maybe you're not, but maybe you have a grandchild that is going to college or will at some point. And you would like to help plan and save to send them to college. So you can contribute to an IDEAL account and claim an Idaho income tax deduction for your contribution. That's limited to a maximum of $6,000 per year, and it's $12,000 if you're married filing jointly. And you can take that deduction even if you don't itemize. So you can do that on Form 39R, Section B, line 14. And you must have made that contribution on or before December 31st for it to be deductible in that calendar year. So let's talk a little bit about withholding. And you say, well, withholding is for people who have a job and are getting paid weekly, monthly, however you get paid. Not necessarily, because if you receive retirement income, as we talked about a while ago, or any other sources of non-wage income, and you are an Idaho resident or a part-year resident, we're going to tax it. So you need to determine if Idaho is going to tax it, and if they are, then if you have no withholding, you come up April 15th and you're like, oh, well, I have all this income and there's no withholding to subtract from it, so I'm going to have to write a check. And you may not want to do that. So if you don't, here's a good way to take care of that. So if the entity paying you the income will withhold Idaho tax for you, you can use our Form IDW4 to determine your Idaho withholding status, the number of Idaho allowances, and any additional amount that you would want to withhold. And then that way, when you go to do your tax return, you're going to have withholding that you can show, and you won't, hopefully, have to write a check. If they won't withhold income tax for you, so say the person just doesn't have the ability or doesn't want to do that, because if they withhold money, they have to remit it, of course, to the state of Idaho. So if they won't withhold on your income, then what you need to do is estimate your annual income from the source. And then you can go out and estimate your tax on the income. So right now, the Idaho tax rate for 2023 is 5.8%. For 2024, it's going to be 5.695%. The legislature passed a bill and lowered the income tax rate again. So what you could do is take your annual income, multiply it by that 5.695% and go, okay, I need to have at least this much paid in. And then you would pay the tax you owe. You can pay it on or before April 15th, and you can actually do it through our website and make estimated payments and do it a little at a time. So say you want to set it up and do it monthly, however you want to do it, and get that amount paid before April 15th when you have to file that tax return. So let's talk a little bit about estates and trusts. Idaho doesn't have a gift tax or an inheritance tax. We did have an estate tax that expired in 2004, so that is not anything that you need to worry about at this point. So the next thing is a credit for income tax paid to other states. And this is available to Idaho residents and part-year residents when both Idaho and another state tax the same income. So say you have income from maybe something in Oregon. Oregon taxes it as well as Idaho. And if that happens, then you can get a credit for income tax that you've paid on the same income. This credit is not allowed in Idaho if the other state gives you a credit for taxes paid to Idaho, so you can't kind of double dip here. But some examples of income that could be taxed by both Idaho and another state would be maybe income from a business or a profession in another state that has an income tax while you're a resident of Idaho. I know if you're a senior or retired, you may not be getting wages from another state, but that is a good example that we always give, is since we're so close to the borders of Oregon and Washington, that maybe somebody drives. I know my son lives in Idaho, but he drives across and works in Spokane. So since Spokane is in Washington and it doesn't have an income tax, he doesn't have this problem. But if you were in Oregon, Oregon does have an income tax. So you would have to look at that, and if Oregon taxes it and Idaho taxes it, then you can get a credit. You are not double taxed on that same income. This is part of the income tax form that you could take a deduction for contributions to an educational entity or to a youth and rehab facility. And so let's talk about what those educational entities and those youth and rehab facilities are. So Idaho Code provides for this educational entities credit, and it is a credit for charitable contributions, charitable cash contributions to qualified educational entities. There is a list of those entities in our instruction booklet, but they include Idaho public and private nonprofit schools, their foundations, trusts, or associations, Idaho public libraries and library districts or their foundations, the State Historical Society or its foundation, the Idaho State Library, or to any nonprofit public or private museums located within Idaho. Donations of goods or services don't qualify. So you can't go give books to the library and it qualify. It has to be a cash contribution. And this credit is limited to the least of 50% of your contribution, 50% of your income tax liability, or $500. And again, it's on that Form 39R, Section D, Line 1 that we were just showing you a minute ago. So Idaho Code also provides another credit for charitable contributions to a youth and rehab facility. And that can be cash or goods. So this is like if you take, you've been cleaning out your closet or doing some spring cleaning and you've got things that you want to take to the Idaho Youth Ranch. And that is what this credit is for. It's limited to the least of, again, 50% of your contribution, 20% of your income tax liability, or $100. And there is a list of those qualified youth or rehab facilities and their foundations in the tax instruction booklet. So I would go out and look at that list if you are planning on doing that, because my son the other day was like, well, I'll just take stuff to the Salvation Army. And unfortunately, the Salvation Army is not on that list. And I kind of said, well, son, why don't you look at maybe taking it to the youth ranch instead, or to the ARC? I said, because you can get an Idaho credit. You not only get, if you itemize federally on a federal Schedule A, get a deduction there, but you would also get this Idaho credit. So again, I would encourage you, if you are considering donating, to go out and look at that list before you decide where to take those items. And the last thing I want to mention is we have a free file program. So if you qualify, you can use the software that's on our website to do your taxes and to file electronically for free. You can do both your federal and Idaho returns, but you must meet the requirements, which do change yearly, and you need to make sure you use the links on our page so that you aren't charged anything for it. So that is something else that you might want to go take a look at and see if you qualify and you're able to at least get your returns filed for free. So with that, Steve, I'll turn it back to you.
Thanks. So hey, if you have any questions, now is the perfect time to ask those. If you type your question in the chat window, which would be in the lower right-hand corner of the screen. I know, Deborah, looks like you were having a hard time hearing this. I'm also recording this, and I will post it on YouTube. And then once I have that recording finished, I will send out an email with the link to that recording. So just in case you missed it or you want to hear it again. But yeah, if you have any questions, go ahead and type them in there. We'll get them answered. Otherwise, really, thank you for joining. I hope you picked up some good information here. All right. Well, thank you, everybody.